Most CPA math questions are not math questions at all. For a huge percentage of calculation-heavy MCQs, 2 or 3 of the 4 answers can die off before you even touch a calculator. They're in the wrong place, they conflict with an important definition, or the number's impossible. Today, I'm going to show you how to solve 4 real questions, 2 from FAR, 2 from Reg, and do almost no arithmetic. The goal here isn't to teach you content or math, but how to improve your odds by going from a 1 out of 4 guess to a 1 out of 2 guess or better. And to save your most precious resource while doing so, time. Okay, so watch where I look first. Okay, read the stem first. Which is the most appropriate reporting action for Maya's Year 1 federal individual income tax return? The answer options include the 6,000 cash performance, include the 4,000 cash, include the 10,000 bank loan, include the 1,200 interest from cost. So this isn't even a math question. You might have started off reading the start of this question and then doing some math, 6,000 plus 4,000 minus 12, whatever. But that's not even what the question is. Don't do any math. You're trying to determine which of these should be included and which 3 should not. So put down the calculator. There's no math needed here. 6,000 cash performance bonus from her employer paid through payroll. Sounds like payroll, sounds like salary, sounds like commission, which are treated just like salary. So this probably is included, but let's carry on with the other 3. 4,000 cash birthday gift from her aunt who has no business relationship with Maya. Gifts aren't included for the recipient, so that's already out. 10,000 of proceeds from a bank loan from a bona fide note requiring full repayment. This is a balance sheet transaction. There's no income here. You've got 10,000 liability, 10,000 cash, no income because you're expected to repay in full. And the last one, 1,200 of interest from a qualifying municipal bond. Muni bonds, if they're qualifying, are not, they are exempt, so they wouldn't go here. So the answer is A. Yes, read why it's right, and read why the other 3 were wrong. Next question. Read the stem. What is the correct reporting and recognition of the unrealized holding loss at December 31? The answer options: 478,000, 6,000 net income, 478, 6,000 OCI, 484, no unrealized holding loss until they're sold, and 478, 2,000 to OCI. So I've got an idea what this question is going to ask, but let's read it. January of year 1, 500,000 face amount of 5-year corporate bonds for 480. Pearl doesn't buy and sell securities for short-term profit. Okay, that means that this isn't part of their like regular operating activities. So management may sell the bonds before maturity if cash is needed. So it's available for sale. Available for sale means it's market fair value and it's not part of net income. It goes to OCI. So quickly look for a couple of the answer options that are either not at fair value or that have them booking the loss or gain to net income, because those can go. You want it to OCI. And the fair value 484, 478. So it's 478 to OCI. So this first one, 478, 6,000 to net income. Cross off A, that's net income. We want OCI. B, 478, 6,000 OCI. Good, that's okay still, we'll leave B. C, 484, that's not fair value, cross it off. And D, 478, recognize 2,000 OCI. So D is still okay, so it's B versus D now. We've gotten rid of 2. We're down to a coin flip, great. The only difference between B and D is the 6,000 versus the 2,000. And the 6,000 is the 478 compared to what? 484, which is the amortized cost, which is what you compare against. I'm guessing the 2,000 against the purchase price. Yeah, it's not purchase price. So this one is definitely B. Yes. And the rule here is on investment questions like this, math didn't even really play a part, right? Where the number goes and how it's marked gives you 2 options that you can eliminate right away. So you're down from a 1 out of 4 guess to a 1 out of 2. And from there, I like our odds. Next question. Read the stem. What amount should Hall report for this investment at the year-end 20x5? And what is the consequence of the year-end fair value adjustment? Okay, so the options are 490, recognize 10,000 in OCI. This is sounding familiar. 490, recognize 7,000 OCI. Report investment at 483. Do not recognize holding gain until the bonds are sold. Report the investment at 490, recognize 7,000 unrealized holding gain. Okay, net income. Let's read the question. 500,000 face amount corporate bonds for 480, and classified them as available for sale. Available for sale means fair value, which means this is going to OCI, not net income. And you can look for the 480 purchase price and 490 fair value. Okay, so 490 is what it's going to be marked at. You can cross off C, that's 483. And it's going to OCI, the gain, since it's available for sale. So cross off anything with net income, that's D. C and D are now gone. We haven't even touched a calculator. All we knew is that available for sale means fair value, and available for sale gains or losses go to OCI, not net income. You just have to remember those 2 rules, and you can go from a 1 out of 4 chance to a coin flip. But let's keep reading. The difference between A and B, which is what is left over, is 490, the 10, and the 7. Okay, so we got to figure out the base. The fair value is 490. What is the amortized cost? It's the 480 is what it was purchased at, but 3,000 has been amortized. So your base is actually 483 against the 490. That's a 7,000 gain, not the 10,000. That's probably why, or what the explanation will say of why A is wrong. The answer is definitely B. Yes, A, treat this unrealized difference, 490 minus 480. After amortizing 3,000 of discount, you get to 483 as your base, yeah, which is the 7. This one was 10. That is why A was wrong. Next question. Okay, this one looks like a beast. I'm seeing 170, 14, 10, lots of numbers, lots of figures. So read the question first. Let's see if we can eliminate some stuff before we start doing any calculations. What is the correct treatment for purposes of computing Lee's year 1 net investment income tax? Okay, the NIIT. Read the options. NIIT is imposed on 94K because taxable IRA distributions is included in net investment. Now, IRA distributions are never included in that. We could cross off A just because we know that definition. B, NIIT is imposed on 70K because the taxable IRA distribution increases modified AGI once modified AGI. Okay, so maybe. I don't know. I can't cross off B yet. NIIT is imposed on 54K because net investment income includes taxable interest, qualified dividends, yes, passive partnership, reduced by allowable investment income. Okay, a lot of stuff here. I can't cross off C. I might actually have to do some calculations on this one. NIIT is imposed on 74K because municipal bond interest is included. Now, municipal bond interest usually exempt. Let's see up here. Tax exempt municipal, yeah, it's 20K of tax exempt municipal bond interest. Exempt means exempt. Cross off D. So we're left with, I think, B and C, but I don't want to spend time trying to add up and subtract things, so I'm down to just 2 options. I'm going to pretend I'm running out of time on the exam, and I've got 10 seconds to make a decision because I've got to move on to the next section. So the 2 options are 70,000 and 54,000. I don't really want to read it. I know that NIIT hits the lesser of net investment income or modified AGI, so I'm just going to take the one that's smaller. This is a total coin flip guess. I'm not actually doing any real work here. Just I'm running out of time, so I wanted to use a little bit of logic to to make my final guess. Yeah, I happened to get it right. That was pure luck. But I did get it down from a 1 out of 4 guess to a 1 out of 2 coin flip. That's really the goal here without doing any math. I did no math. Yeah. So that's really the rule on the test, and specifically on these 4. Before you do any calculations, read the question, see what it's actually asking, see if you even need a calculator, if you need to do any arithmetic. Spend the 10 seconds, ask these 3 questions. Do numbers even matter? Does placement kill anything? Does an available for sale bond, it's marked at fair value, right? So it goes to OCI, not net income. You can probably eliminate 1 or 2 of the options just on that alone. On the actual exam, doing any math is the last step. Arithmetic is the last thing you should be doing, not the first. You're going to spend too much time doing math that you didn't have to do. So if you want to drill this, there's a free 20-question sample over at chatcpa.io/exam. No sign up, link below.